Hello, Samuel here for SAMBOT the Trade. Welcome to this weekly video. I'm sorry I did not do it on Monday as usual. I didn't have time, so I do it right now on this Wednesday. Basically, I'm going to give you a new kind of strategy, okay, more on the longer term. I think this might suit more people because spread trading is something that you need really to be there and check every time. So maybe having a longer term strategy might be better for most of the people. So I'm going to explain this in this video right after our quick market review. So basically Bitcoin is still going down, okay, it's still in this channel and moving further down. The down tokens skyrocketed due to this move to the downside. We have a small bounce right here. Now we're gonna see what's going to happen. Okay, I have no idea. As it looks like it's going to go down a little more, but we never know. We can have a fake out and then just go back up. We're going to see what's going to happen in the future. Here we see the def cross. Okay, I didn't put it on my previous chart, so I just wanted to show it to you. The def cross is when the 50 days moving average crosses down the 200 days moving average. It happened here on the 19th of June. And so when this happens, usually we have a 1 to 2 year bear market. Okay, it doesn't mean that it has to do the same this time, but basically every time it happened in the past, it was 1 to 2 year bear market. Okay, all this being said, this does not prevent us from trading. Okay, so now let's go to the strategy I wanted to talk about. Okay, so I had some profits this week, especially with this bot, which was on the BNB down token. And so this gave me the idea to talk about this longer term strategy, which I think is more suitable to most people who don't really want to be active traders. So we're going to take this as an example. Okay, so on this bot, okay, I configured very wide ranges. So you can see that the first buy is at minus 20%. Okay, once the first order is triggered, every 15% we buy up to 3 orders, and the take profit is 20%, both on a single order or on a multiple order. Okay, so this is very big moves, but since we are starting with our first order very low, we can do this. Okay, and this does not cause any problem because we are basically covering 35% plus 20%. Okay, so it's a huge drop. Okay, you can add more orders if you want, but basically yes, I will go to the core principle of the strategy I wanted you to think about. Okay, is so starting to buy very low. Okay, and from there covering a big range so that the total range is huge. Okay, so you can even think covering up to 80% drop if you want, depending on what you trade. Okay, so I would prefer, if this is my opinion, I prefer staying on coins I know and not going on too volatile coins. For example, you can see the SNX token. I will show it to you. SNX USDT. You can see that this token has known, okay, I have some internet issues, has went up very hard, and now if you check the drop, okay, we are at minus 80%. So maybe we should avoid this kind of token, especially if you're trading leverage token on this. But yeah, if you stick to Bitcoin or things like this, I think you will not get before you get 80%, you will have multiple bounce. Okay, so I would avoid these kind of tokens and stay on BNB, BTC, Ethereum, or more. They are still highly volatile, but a bit less than these kind of coins. Okay, you have also this one which has known a huge upside move, and now we are seeing a crash. Okay, but the bounce is still correct. Okay, so this one seems a bit better, but anyway, I think you understand my point. Don't go on too much volatility that you cannot cover. Okay, so yes, in the big lines, start buying low. So your first order will be low. Then layer your orders on a wide range so that you can cover any drop, and put huge take profits. Okay, so basically what will happen is that this kind of bot will complete one trade maybe in 1 month or 2 months. Okay, but you don't really care if you put these wide range, then you can put bigger amounts to invest. Okay, I'm not a financial advisor, I'm just giving you these ideas so that you do whatever you want with your money, but basically this can be a strategy that would be nice. Okay, I don't really need, I think, to go into too much details. If you understand the big picture, okay, then you can go to any coins, okay, leverage or not. Okay, I like doing it on leverage tokens because you can go both on the downside and the upside. Okay, so for example, let's take the BNB down. Oof. Gonna remove the logarithmic. Gonna hide this. So yes, now you can simply measure the drops. Okay, so you can see 56, sorry. Let's see here. Wow, this is a big wick. Okay, this one is a bit huge, but maybe I don't know what happened. But let's take this one. Okay, this one is just, we just measured it. The other one, 60%. Okay, so basically, you know that when you're trading the BNB down tokens, you should cover, let's say it can go up to minus 60%. Just to be on the safe side, cover 80%, okay, minus 80%. So you start your first buy at minus 20%, for example. And then you can do it on the BNB up, for example. And you do the same strategy so that, let's say that the market, oh wow, this one is huge, okay, minus 91%, okay. So now it's up to you to take the risk on how you want to handle it, okay? But let's say basically you set your first entry point at minus 25%, okay? This would mean that your open orders should cover still a 90% drop, so it's quite huge. So yes, basically there's no perfect strategy. But this being said, okay, if you enter at minus 25, there's a lot of chance here, because we're on a daily chart, that you will get your second order filled by there, and then you will get out on this bounce. Okay, so if we take this example, it's not as bad as this, simply because you should be able to get out, I think, on a bounce, and then let's say it goes back down to minus 25, so you would have your first entry at this point, and then it goes at, then you should cover again a very, okay, this drop is very, very big, okay, so it might be a bit hard to cover, so maybe you can just check another coin, like BTC up. Okay, I'm still on leverage tokens for now. And we can try to measure. Here the drop seems much better, okay, minus 51, which is much more that you can handle, minus 80, this you can handle quite well. So this might be a good one, okay, and then we can do the same thing to the BTC down. Wow, this is a big drop. Okay, so now we are at a very low point anyway, so we will not be stuck in this huge drop that we had during the bull run. And here we can see, if you take from the wick to bottom, 67%. 40%. So this one can be easily tradable too. Okay, so this being said, something important is that you have market trends, okay? And when, for example, if we were, let's say you were trading this down token and we got into the real bull run, at some point it's your job to know that you need to stop it right now, okay? Because this bull market is done to be continued. But in our current situation, for example, we are kind of at the market top. Okay, so even if we go back to another top, we are at a very high level, meaning that, in my opinion, the down tokens are safer to play right now. Okay, even if you have a bounce, you might have a loss or two, but we are still very high in price. Okay, so we will need to go down. After the market crash, let's say in 1 or 2 years, all the down tokens will be very high, and we'll have to start reducing exposure to this. Okay, so I'm talking a lot about up and down tokens, simply because you can switch from one side to another, but the strategy I'm telling you would be it can even be a safer play if you just stick to classic, to real coins. Okay, let's say Bitcoin, or let's say even Ethereum, okay, which is a bit more volatile. And simply you look at the market structure and you say, okay, I'm playing this on the long run. So you measure the drops like I did before, and you configure your bot so that it will buy Ethereum and sell at a very high price. Okay, so with a take profit at 20, 30, 40%, depending on what you expect the market to do and this depends on the level where we are. Okay, so now actually we are a bit in between, but we are not at the all-time highs. So this being said, if we bounce, you will have a nice profit to take, and even if we go lower, we will go lower, but you already passed this minus 50% that we had in the past months. So I hope I'm being clear. I'm not giving exact answers, okay? Because there's no exact answer. In trading, you need to adapt to what is happening, and I'm just giving you a kind of a method that you can use. So for example, on my BNB down USDT bot, okay, so it closed one trade, but I had a nice win, so I'm happy with this. And now you can see that after selling here, okay, it's waiting for a 20% drop before even entering inside. So my money is I mean, if I start buying at these kind of very low prices, this means that I have a higher chance of having a market bounce at some point. Okay, so all these 20%, I'm not risking any capital before it goes back down to at least 20%. And at this point, I'm starting to enter. So this, in my opinion, kind of protects my money, and I'm buying only when it gets very, very low. So this is the main point of configuring bots to do this kind of stuff. Okay, so I hope this helps. I'm just showing one last time the configuration. Okay, this is not the model configuration. You need to configure based on your analysis, as I showed you previously, by measuring the drops and estimating if it's safe or not to play it with the drops you're configuring. So for example, in this one, first buy at 20%, then every 15% drop it will buy up to 3 orders, and the take profit, both if there's multiple orders or only one order, it's 20%. With a stop loss at 10 and a soft stop loss so that I don't get out on wicks. Okay, if you don't know what it is, you can read the description here. Okay, so that's all for this week's video. I wish you a good week and talk to you next week. Bye.